Hi and welcome back to the channel, and today guys we're going to be talking about Hedera Hashgraph. We'll be jumping into the technical analysis of HBAR on the 1 hour daily and weekly timeframes, giving my thoughts and opinions on where I think it is heading. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into today's video, kicking things off with the 1 hour time frame. So here we have Hedera Hashgraph, HBAR, paired up with USDT on the 1 hour chart, and Binance is our data source. So as you can see, we have this slippage to the downside. We just want to do some sense checks. I'm pretty certain this is impulsive. So let's go ahead and just do our due diligence here. Yes, it is. And for the most part, it looks very complete. So let's go ahead and show you. We got 1, 2, 3, 4, and 5. The fifth wave obviously containing a very clear 5-wave drop. We then start to see this break to the upside. We're just finding resistance on the 50 EMA there. So I expect a little bit of a cooling off, but not yet done. I suspect further to the upside after we have kind of cooled off a little bit. So keep a close eye on that. Ultimately, this 5-wave drop, is it a concern for us? Potentially. Let's go ahead and just zoom out here for a moment. So the issue that we have with Hedera Hashgraph is that there is this idea of a pretty bearish move. Now, ultimately, if I go ahead and bring this in, we check our due diligence again. We very narrowly missed. Actually, yeah, we did. We narrowly missed it, which is quite a good sign, actually. So we narrowly missed this here as a 1.618 from this move. So we measured this, we pulled this here, and we narrowly missed it. This actually means that we are more in line to be a W, X, Y, X, and Z. Okay, because we're deeper than 1.236, but not as deep as 1.618. So it, for the most part, would be a very interesting point. Now, the problem that you'd have here is that the X wave cannot just be a 5-wave drop. It would have to be a zigzag. So we'd still be looking for a slightly deeper move overall to kind of complete out that Z wave pattern. Let's go ahead and get our expectations on that. Of course, this is probably a bit more aligned to the large time frame than the hourly. I'll jump back down into the hourly in a second. In fact, let's go ahead and do that right now. So our expectations are close, but not quite where they need to be just yet. So we can rally on up and then drop back down into another 5-wave move. Ultimately, we will be looking at coming down, and we've already tapped into it a little bit here, but it's barely there. It's basically this really broad range right here. 4.05 cent up to 4.55 cent. Okay, and that'll be the Z wave low there. Okay, so for the most part, that's where it would kind of look to me. We've completed 5 waves. We must move up in 3. In my opinion, we start with 5, we must end in 5, and then basically come down one more time into a new bear market low, which we recently hit just a few hours ago, into another new bear market low to complete this pattern off. So yeah, we're getting close to the bear market low point, I think, for Hedera. We're not there yet, though, in my opinion. Of course, things can change and morph and adapt as time progresses, so keep a close eye on that. Take it up into the daily time frame. As you can kind of see here, we had this move coming down from the August high. It looks like a 3-wave pattern correction, and then so we still have this move to the downside. So we have the WXYXZ kind of idea going on down here. And it's actually not a bear market low. Sorry, that's my bad. So 3.82, and the actual bear market low is over here. So that would be 3.56. Okay, so that's going to be a bear market low point. So maybe we might be able to narrowly avoid it. So the actual low was January of 2023. And then, of course, we have a new push down local low wise in June of 2023. And so we do find ourselves in actually an interesting spot. I'd say potentially actually slightly stronger for Hedera on the daily than the hourly. The hourly is not looking as good as it potentially does here on our daily time frame. Let me show you why. So we have this coiling down, this kind of coiling up, I should say, pattern, right? We have a 3-wave correction in here. This is okay. We have this move coming up, and I think actually we're probably about to have a break upwards. I suspect that there is a high point here to be had. However, I would be a little bit cautious. Okay, there's no guarantees of this, but potentially 11.1 to 14.12 as a potential break out of this triangular wedge. Okay, and that would basically be a three-wave pattern that would go into this particular direction. Now, on that note, let me remove that fib. I would say that we also have to have a three-wave pattern inside our C-wave structure here, and if we were to do such a thing, it would actually fall short of our higher expectations and would be more aligned to a double top situation right up here. So it could be that our minimum expectation double top is actually what plays out, because it looked like a three-wave pattern to come into here. So we'll be a little bit cautious. It looks like there's a potential move to the upside. Anything lower than the most recent local low, though, would basically create those invalidations. Anything lower than 3.99 would basically write that off, at least temporarily. So, it'd be interesting. Ultimately, though, we are in a bearish structure at the moment that hasn't been broken. So we want to be a little bit cautious with things. But it has been just changing, right? We went bullish to bearish. We're not in a bullish structure right now, but we can easily flip and turn it. The structure from this entire bear market is very impulsive. It does not look strong long term, in my opinion. So we'll keep a close eye and see whether or not we're going to get any good structures emerging. But for now, I think, it's going to be one of these particular ideas that plays out. We're either going to get confirmation of this break upwards, hit these highs, and then break down, or we're just going to break on down. Anything lower than basically 3.99 cent will confirm that breakdown. From the weekly standpoint, we are bearish again, below the 50 and 200 EMAs. Every single time we've tapped on this 50 EMA, pretty much since we lost it in January of 2022, it has been major resistance for us. Okay, unable to kind of break above the 50 weekly EMA. And so we can't be too confident on Hedera until we get above this key area of resistance, which currently sits at 6.72 cents. So a weekly close above the weekly 50 EMA is going to be the first hurdle to try to get across. Once that is done, targets will be 11.35, which is our 200 EMA. And once we have that one, a close position above that, that will give us then a lot of confidence for Hedera. But for now, I'm not expecting too much from HBAR. I suspect it's just an accumulative phase that's going to continue for a while longer. Let me know what your thoughts are in the comments down below. If you found this useful and informative, smash the like button. If you're new, subscribe. And if you haven't yet joined us in Discord, why not check it out? Linked in the description below. Until the next one, though, guys, have a fantastic day.